Hi, so being in Silicon Valley, we deal with a lot of software companies, and the software industry just in general is very challenging, really for three reasons. First off, you have a very fast-paced, ever-changing industry such as software, and you're trying to fit that into oftentimes archaic tax-related laws as well as accounting pronouncements that just haven't been able to keep pace with such a fast-moving, fast-changing industry such as software. Also, there are a lot of different characterizations of software. Sometimes software, depending on the facts and circumstances, can be considered tangible personal property, other times services, and other times intangibles. And so with respect to those three different categories, the way you actually treat software can be very different from one jurisdiction to the next, and depending on the facts and circumstances. And then finally, you also have all these different interpretations depending on jurisdiction with respect to software. You might have a different interpretation for federal purposes, for various different state purposes, and then also of course for foreign purposes. So software, because of those three key reasons, is just innately very challenging from a tax perspective. And now in actual practice, what we typically see these difficulties pop up or surface oftentimes with respect to state issues. When you're talking about state nexus and state apportionment, with state nexus, again, what you're trying to do is you're trying to really afford as much protection as possible under Public Law 86-272 so that it doesn't trump or trigger a filing requirement. And in the instance of software, Public Law 86-272, there's a big question as to whether or not it applies. It typically applies to basically the solicitation of tangible personal property, and there's not a filing requirement if you fall under that. But as we pointed out before, with software, the question becomes, is it tangible personal property in this instance, or are the intangibles in this instance, or are we dealing with the services in this particular instance? And so depending on the answer to that question, it's going to be determined as to whether or not Public Law 86-272 should even apply to that particular software-related transaction. It may be that it is not considered tangible personal property, in which case Public Law 86-272 just doesn't apply. It's also difficult to even fit software-related agreements under Public Law 86-272 because oftentimes it's not just the sale of software. Instead, oftentimes the software sales have as one of their components an ongoing maintenance contract or services contract, some additional aspect to the contract that really puts them beyond the purview of Public Law 86-272. So from a nexus standpoint, you have a lot of difficulties to prevent or to at least afford the protection that prevents a company from actually having a filing requirement in various jurisdictions. That's why you see a lot of companies that are in fact involved in software are filing in a great number of jurisdictions because they just can't find the protection under Public Law 86-272. Then also from an apportionment perspective, you have the same problems with respect to characterization because many states, depending on how the software is characterized, whether it's intangible, whether or not it's tangible personal property, or if it's services, it shows how you've got to apply the actual apportionment methodology. It could be that, if the software is considered to be intangible, that one methodology applies, but if it's actually considered to be tangible personal property or services, then other apportionment methodologies apply. And then beyond that, you've got the requirements may change completely depending on the different state jurisdiction that you're in. The circumstances surrounding the methodology that applies, depending on the type of characterization of the software, can change jurisdiction by jurisdiction. And so in order to, when you actually go to compute the state apportionment, it becomes a very difficult task and oftentimes ends up in an inequitable result. So these are really the inherent problems that we see, or inherent challenges and hurdles that we face when we're dealing with software in terms of state nexus and state apportionment related issues. We also see a lot of issues with respect to really fixed asset roll forwards in terms of how to amortize software, because software is oftentimes not just sold on its own. It's oftentimes sold as part of hardware, or it's sold as part of an additional contract. It's sold in various different forms. It can be sold over the internet, it can be sold as canned software, and depending on how it is in fact sold, what kind of method is used to transport the software, all these different variables really come into play in terms of how that software should in fact be amortized over a period. So certainly with respect to the cost recovery and your fixed asset roll forward schedules, software is going to be quite complex. Also with respect to business incentives that come through the door, which oftentimes deal with amortization, depreciation of property, whether or not software is in fact a qualifying form of property in order to get these benefits is oftentimes a point of contention. It's not your typical machinery and equipment that technically qualifies or typically qualifies for these business incentives. Instead, it's kind of this new strange kind of anomaly, and how does that fit in with the business incentives in terms of fixed assets. So again, the software it can be challenging with respect to cost recovery and fixed assets. Also with respect to R&D credits, and we found a lot of difficulty with respect to sustaining R&D credits on audit when it comes to software related industries. And the IRS has put together an audit techniques guide that specifically addresses the software industry because it is so complex, and really spends a lot of time delineating what the R&D activities are that are high risk, that are medium risk, and that are low risk. And you will see a lot of software related R&D activities that are both high risk as well as medium risk. So it's really quite challenging to qualify a large portion of your R&D with respect to software without a lot of support, a lot of underlying work surrounding that, and a lot of interpretation of law with respect to the software industry. So again, those are really kind of the three main areas that there's a lot of there are a lot of challenges pop up with respect to the software industry. And then also, from a foreign perspective, if software is considered intellectual property, you've got a whole nother host of issues that you need to deal with in terms of controlled foreign corporations and transfer pricing, permanent establishment to a certain extent. So really, the purpose of this video is really just to inform you in terms of, if you are dealing with a software industry or software company, then you certainly need to spend time looking into the issues. And Clifton Douglas can help with this. We, being in Silicon Valley, have dealt with a lot of software companies. We know all the nuances. We know all of the specific issues that come up and how to deal with them effectively and to assist companies in this area. So certainly, if you are in this particular industry and you'd like assistance, then visit us at cliftondouglas.com, or you can give us a call. Thanks so much for watching today, and take care. Bye-bye.